Hello, today is Monday, June 29th, 2026. Here is your daily signal. According to Fortune, Donald Trump has turned against big oil donors who together spent nearly $100 million to support his election by publicly accusing major oil companies of price gouging and urging the Department of Justice to investigate their executives. Trump's reversal comes at a striking moment. U.S. crude oil prices have returned to levels seen before recent geopolitical conflicts, but gasoline prices at the pump remain stubbornly high, fueling political tension over why consumers aren't seeing relief. Trump's accusations, targeting industry giants like ExxonMobil and Chevron, follow their significant donations to his campaign and highlight mounting scrutiny over price discrepancies. Key numbers underscore the scale and stakes. Fortune reports Trump's call for a DOJ investigation despite big oil's financial support, and that crude prices have stabilized while gas prices lag, per data from June 25, 2026. Should the DOJ act, the move could intensify government scrutiny of oil company pricing practices in the near term, risking a souring of crucial political alliances within the U.S. energy ecosystem. In the coming months, this growing rift may affect energy policy and regulatory approaches if Trump wins office, with investor confidence in oil giants already wobbly as legal and political uncertainties grow. Next, let's turn to the impact of volatile oil prices and inflation on U.S. businesses, drawn from the latest Federal Reserve survey. A new survey discussed by Fortune finds U.S. businesses are growing increasingly anxious about inflation, as persistent oil price volatility amplifies their cost and pricing dilemmas. The Federal Reserve's quarterly poll of 530 company executives shows that 25% now cite inflation as their top concern, almost triple the figure from the previous quarter, reflecting how elevated oil prices and recent supply shocks have moved to the forefront for American firms. Behind these numbers lies an environment marked by geo-driven energy disruptions, specifically from the ongoing Iran war and interruptions at the Strait of Hormuz, both of which threaten supply lines and exacerbate inflation woes for sectors like airlines, manufacturing, and logistics. In the most recent quarter, despite mounting input costs, 63% of surveyed companies said they have managed to avoid raising consumer prices, but that could change quickly if oil supply trouble drags on through the second half of 2026. Experts warn consumer prices are likely to climb faster, and businesses may be forced to pass along more costs. Longer term, if inflation remains sticky and input costs high, profit margins could suffer, with companies considering job cuts and scaled-back investments, a scenario especially acute for energy-intensive sectors. Airlines and logistics operators, among others, may have little choice but to more aggressively push the pain onto consumers if the situation persists. Moving on, we look at the growing role of politics in determining how and when advanced AI tools are released to the public. TechCrunch reports that the Trump White House has directed OpenAI to delay the public release of its newest model, GPT 5.6, citing safety concerns and instructing the company to limit initial access to a select group of partners. This marks a significant escalation of political oversight. Since 2024, the administration has tightened controls over advanced AI model deployments, shifting away from the industry's tradition of broad public launches and toward a regime where White House and federal agency guidance hold greater sway. OpenAI, headed by CEO Sam Altman, has complied by opting to provide GPT 5.6 only to pre-vetted research and industry partners, following direct instructions issued on June 25, 2026. As a result, near-term access to the new model is restricted, allowing those selected partners a competitive research and operational advantage. Rapidly, though, critics raise concerns around transparency and equitable access, warning that repeated political intervention could slow AI innovation, shift market leadership to more compliant companies, and even trigger legal and regulatory backlash from technology and civil society groups. Now, onto the markets. International markets saw mixed action, with Spain's EWP leading gains, up 0.79%, while Germany's EWG dipped 6.1% over the month. In Asia, Taiwan's EWT posted a strong 2.34% daily gain, while China large-cap FXI continues to lag with a 10% monthly retreat. Commodities were volatile. Gold GLD slid 1.17%, and silver SLV dropped 1.4% day over day, but U.S. oil USO jumped 2.13%. In the US, the S&P 500 SPY closed 1.27% higher on the day, while the semiconductors sector stocks outperformed, surging 3.35%. Healthcare stocks Roman 45 were barely changed, and real estate XLRE ticked down 1.39%. Leading gainers included DMC, which soared nearly 690%, and Universe Pharmaceuticals UPC, up 298%. Notable losers were Fami, plunging 78%, and Honeywell HON off by almost 49% amid sector rotation. That's it for today. You can find more news and details on our website. Goodbye.